Good morning, everyone. Today is Thursday, May the 11th. Thank you so much for joining us. Today, we've got Charles, who's going to talk about out of state hires and employer and employee tax forms and also state specific regulations. If you have any questions, because sometimes this does cause questions to come to mind, like what if tomorrow something happens like this? What can we do? Please feel free to put those questions in the chat and we will address them when Charles has completed the presentation. We have a lot of information for you today, so I hope you can hang in there. And then I've got some important stuff to tell you about of things to come. So Charles, thank you so much for being the expert that you are and sharing your knowledge. Take it away.
Thank you, Saundra. So yes, so what happens is like your business grows and all of a sudden you have to hire somebody who's in another state, or say somebody that is currently working for you is in another state. What do? Well, the first thing that you do is you register with that state. And so when you first find out that there's a state that needs to be added, you would contact us and we can assist you with that process. We don't register on your behalf, but we can provide you with the links to register. And there's usually two separate departments for each state. It's Department of Revenue, which handles state income tax, which is most states. There are some that do not have income tax. Washington and Nevada are local examples of that. And then there's also state unemployment, because every state does have unemployment tax. Unemployment tax, just for your information, is something that is a program that is shared between the feds and the states. So each state has that. So they do have them called by different names. So, I mean, in California, you're familiar with the EDD, all right, and the Employment Development Department, and that's usually the one that handles any kind of unemployment. And but since California has one ID for both, that's also also where you can go to check on, state revenue items as an employer. Now, I do have examples of those websites. Say for Arizona, this is for their withholding tax, and would be their unemployment, and they call it the Arizona Department of Economic Security. For Nevada, which doesn't have a state income tax, it's the Nevada Unemployment Insurance, and this one is like very simple design. Then you have Oregon, which has an income tax, the Oregon Department of Revenue. And then you also have the Oregon Bureau of Labor and Industries. And so that's what they call this one here. And then in Washington, which also has no income tax, it's the Employment Security Department. So these are the different examples. And again, when you contact us, we can provide you with this information. So what you would need to do is, one, register with them, okay? And then two, get a power of attorney with us so that we can file your taxes and collect and pay your taxes on your behalf. The power of attorney basically tells the agencies that PayrollCentric is acting in your place for filing and paying taxes. And also, if there's an issue that can come up, we can contact the agency and say, hey, this was filed, this was paid, and so forth. So that's where that usefulness comes in. Now, what you would receive in return from the state is you would receive an ID number for that specific tax. Like I said at the beginning, California has one for both. So in the state of Arizona, you may get a separate state tax ID and then a state unemployment tax ID. Now, along with the unemployment, you will get an unemployment tax rate. Those have like they start off with, say, a new business rate, and then after that first year, it's based on your unemployment experience. How many employees do you have? How many employees have filed unemployment claims in the past year? And that can increase and decrease your unemployment tax rate in that state. They all have maximums. In California, the maximum allowed unemployment tax rate is 6.2%. They also all have wage-based limits What those are is that past a certain dollar amount that of employee wages, the tax is no longer being withheld. In California, it's $7,000. What that means is that when your employee reaches $7,000 in unemployment taxable wages, right? Wages that are subject to that tax, then it stops. And that's why the beginning of the year, your tax bill looks higher than the end of the year because, people reach 7,000 in the first couple of months. So that's how that all works. You let us know. We can send you the links. You register, right? And then we add the state to the company. And so I'll show you real quick where we do that. And under the company level, we would go to the taxes. And so we add the taxes that are subject in that state. Now, we do add a state income tax code for each state, even for those states that do not have a state income tax, simply because that's how the system works. So it will be one that is, it doesn't do anything. It sits there because we have to have one assigned. We'll also have the state unemployment, and also there are ones like in California, if I go through, ones that are affiliated with state unemployment, like the California Education and Training Tax. Okay, that one is affiliated with state unemployment. It follows the same rules, but it has its own tax rate. So we add them to the company. Okay, so that once that is done, then you'll be able to go to the employee. And if you're adding a new employee, you can select that. Let's go ahead and go into add an employee. We'll do a W-2 and we'll click on add. And I'll just go through the sections to get to the tax. And then you can actually come here and select their state, like say, Oregon. And then it also will automatically change your unemployment and work state to that state for your hiring of a new employee. Okay, and so you would enter whatever is required for that state. How do you know what's required? Let me go ahead and use a different example, such as Arizona. What is required for that one? That depends on the state tax form. Now, before this meeting, Saundra notified me that for a state like Utah, they still use the W-4. In California, you used to be able to use the W-4 to do the setup for the state tax, but that's changed. The W-4 has changed. It's no longer the same as the state form. And I'll show you what the state form is. It's this one for California. And it's a basic one where you put in their name, their city, and of course, the important thing, their filing status. And then you use this section right here to put in what their exemptions are. And then they can also, if they want to, claim exemption from withholding. And that is a tricky one. Some people think that's exemption from tax liability. It's not. It means that they're exempt from having tax withheld on their paycheck, but they will still be liable for taxes at the end of the year. Now, this is the EDD state form. It is known as the DE4. And you can usually find at the bottom right here on their forms, let's go ahead and go up, is the form ID. And it will also list when it was last revised. Now, but for something like Arizona, which is where Saundra is, she has to fill out this form, which asks for percentages. Right? And she would mark the correct box depending upon which one it is. And so for that, it's that kind of situation. And then there's also, say, for Oregon, it has a different form. Each state has its own form. And so the way to find out what they are is I'm going to show you what it is that I usually do is I put in, say, the state. Okay. I'll put in Alaska. No. I'll put in, let's see, a state that does do withholding I know is New Jersey. Okay, I put in the form W-4 and it usually tells me, it usually brings up that state's form. So the state form is, according to this, NJ-W4. And they're different things. In Arizona, it's the A4. In California, it's the DE4. It just depends. But if you put in the state and the Form W4, Google seems to figure out what you're looking for. And this would be the one for New Jersey. Now that that's done, you have them filling this out and you've entered their information for the new hire. That's great. What do you do for a existing employee that moves? I'll just hit OK. Well, we'll go ahead and select Johnny Appleseed here, because we know from the legend he liked to move around a lot. So he's currently listed in California. So we go to the taxes. And we can do one thing is we click on Add Change State right here. And we can select a new state. So he moved to Oregon. I guess, it's very suitable for apple planting. So we hit Oregon, and we can tell it when it goes into effect, say the 5th, right? We put the 5th, and then we hit Next. And so now it's telling us what it's going to do. Select taxes from California, which no longer apply. So that's these. And then select additional taxes from Oregon to apply now. Now, here's what the tricky part is what I'm going to do is I'm going to remove the California ETT and the California state unemployment, but I'm going to leave, and I'm going to remove the California SDI, right? Actually, no, I'm sorry, I'm going to be keeping those. Okay. All right. And I'm going to click on Save. Okay. Well, we'll just go ahead and remove that. And it changes everything. Now, the reason it wouldn't do the California SUI is because this is our demonstration company, and so that one it was just not operating correctly. But if you notice, all these others are applied. That's the idea. And also Oregon. Now, another thing that can happen is, what if he's changing his work state? Say his work state is still going to be California, right? There are those kind of situations where somebody is living in one state and working in another. You want to check with the states to determine which one is their unemployment state. As far as the income tax, they could very well owe for both. A situation could be like Lake Tahoe, right? Where they're living, Lake Tahoe, where they're living in Nevada, they're working in California. Well, if they're working in California, they do owe income tax for any income they earned in California. And then in Nevada, if it happened to have an income tax, they would have to owe for all their income. So it's kind of like a dual situation. But unemployment and things like disability are supposed to be reflecting where they would be making the claim. So that's something that you would actually need to contact the states, their unemployment departments, to determine which one should be their work state. Okay, and the work state is what determines, you want to make sure that wherever they're going to be paying unemployment tax would be where they would claim unemployment tax. And that one gets tricky because it's not based on residency. So that one, you would check with them, you would let us know, we would set up the appropriate taxes, or by that extension, if you are working in here well enough, you could set up your own by just making sure that this is in alignment with the state unemployment taxes are in alignment with what the states have told you. I had that recently come up with a situation between Kentucky and, Kansas, I think it was, and Tennessee, right? So it was a situation where it's like, they contacted them and they told and figured out which state was the unemployment state, because they do owe taxes in both. Income tax in both. That is one of those kind of situations. Other states will have what's called a reciprocity agreement. States like New York and New Jersey have that. And then there's also things like, just because we're dealing on the state level, there's also things like local taxes. There's a couple of local taxes in Oregon. One's called the Tri-Met, which is for the transportation in the Tri-Metro area in Oregon around Portland. And then if you have somebody who works in Pennsylvania, for example, every single location in Pennsylvania has a local tax. There are income taxes for that municipality. So, we just need to make that determination. Indiana, we have to know which county they're in. So that's the kind of thing that determines the local taxes. California, we're fortunate enough, we don't have any local taxes. But other states, as you expand out, you want to make sure on that. And that is the kind of the thing that we go over. Of course, if you ever when you come into this situation, again, what you would do is you would contact us. We would provide you with the links to register with the agencies, and you register. You fill out the POA. You give that to us. You give us the IDs for those taxes in those states, and we get you set up in that state. You give us the unemployment rate, we set that up, and then you can either add the employee or change their state. The other thing we do want to mention is that these ID numbers are required to file taxes. So we need them in order to do that for any particular quarter. So if you let us know that you're adding a state, we need to have those IDs within a month's time of you adding that state, or else there is a fee each payroll until we get those IDs. That's just because it's actually for your protection, because we don't want to get into a situation at the end of the quarter where we're not able to file your taxes because we don't have the ID number. And that's all I can think of at the time, but I'm open to any questions.
Hi there. One thing I wanted to emphasize is when you do provide us with the new ID number, excuse me, we do need the proof of that number. In other words, a screenshot or the email or the notice that the state sends you assigning you that number. Anybody can write a number down, and we want to make sure that it's absolutely accurate. So that's why we require you to send us the proof of the number. And if it's getting close to that 30 days, you could send us the acknowledgement from the state that you have in fact applied. And that will give you a bit of a grace period before we have to charge you that fee. And the fee is $30. So, you don't want that to happen. And that's really important to pay attention to. The other thing that Charles mentioned is, Charles, if you could click on the one of the state forms that an employee would complete, just any one of them is fine. Okay, well, Arizona is a good example. When I filled out my form, having lived in California all my life and filled out my form 4 years ago, I needed to call my CPA to find out what percentage I should choose based on my income. And we want to caution you not to give your employees advice, because they could come back and say, gee, you under withheld, and now I owe money. And you told me to put, 2.0, and you don't want to be in that position. So please encourage your employees to speak with their financial advisor, their CPA, or even call the state if they don't have one that, normally does their taxes for them, so that they can get advice from the source, but not from you. We don't want to put you in a position of giving advice on something that you're not qualified to do. And not saying you're not qualified to do things, but tax is really a slippery slope. You don't want to be in that position. In the state of California, I get the question all the time, should I be single or married filing separately? What's the better deal? And I always say, call your financial advisor. We cannot give advice on that type of a thing.
For that example, I like to say that if you ever get like a moving violation ticket, you don't want to ask your plumber for legal advice. So there's that. It's just basically. And the other thing I would say is always have them read the instructions through, and then if they have a question, to talk to a professional, because sometimes I hate reading the instructions or the guides or the worksheets from any kind of tax agency. I hate that myself. But you can often answer the questions. And once in a while you sit there and go, oh, now this makes sense. I also wanted to mention in all of this, sorry for interrupting, Saundra, but there is a couple of states, Texas is one of them, where you can't actually register until you've run a payroll with somebody in Texas. We understand that. So you have to actually run a payroll with a Texas employee, and then you can register, because that's kind of the verification. Is like, yes, you have a Texas employee. I don't know why they do it that way. They do it that way. So basically, with that kind of thing, you would let us know as soon as possible. We get it set up, because we can set up the state prior to you giving us the power of attorney or the registration. We can do that so that you can at least run the payroll with the employee, because that's usually when somebody tells us, it's like, I'm adding a state and I need to run my payroll today. That's usually when we
that does happen. And we understand it's not something you deal with every day. It's something brand new. And a lot of the companies, we were talking about this before the webinar began, many companies have gone to remote workers. And now that you're remote, you can go and move anywhere, right? So this might not be at the forefront of your mind when this occurs. So it's a really good idea to, just try and keep in mind that it does take time. The states don't always respond quickly. And if you have a situation where you filed and you haven't heard anything in 30 days, give them a jingle, see if they'll answer your call. And if they don't, do let us know. And so that we don't automatically charge you for something that you have no control over. Okay.
Right. And we would rather add the state without that information than have you run the payroll with an incorrect state, because that requires getting it fixed, moving taxable wages, all that kind of stuff. And sometimes you can't get the money back from the wrong tax agency, the wrong state, until the quarter end on a refund on the tax return. So we'd rather do that. That being said, that would be the point. Running that payroll and adding that state, that would be the point that 30 days starts. So you do want to, if that's the situation, you want to contact the state right away. Yeah. And again, like I said, we can provide you with the links that gives you the information.
And we're pretty good about that. We've got the links at our fingertips, so we can get them to you quickly. Just send us an email to support, and your assigned CSR will send that to you. Or if that person's not available, somebody will get that to you. The other thing I wanted to mention was, you might hear from an employee who says, go ahead and fire me. I've paid into unemployment. I'm going to get it. And that's not true. The employer pays for unemployment based on the wages that the employee made. So, it's not an automatic. They need to apply for unemployment. They need to have a good reason to apply. You, the employer, need to verify their wages. So, which is why you'd never delete an employee, by the way, in your system just because they're terminated. You just change their status to terminated, and whether it was voluntary or involuntary. Make sure you have good notes as to why, if it was involuntary, but keep that information handy because you're going to need it down the road. If you are in a situation where, please don't do this, but you have to, find another payroll company, and it'll make me cry, don't do that. But if that occurs, you want to make sure that you gather all your information, because down the road, one of your employees may file for unemployment, and you're going to need those wage documentation papers in order to be able to fill out the unemployment forms. So, but none of you guys are leaving. I know that. And if you do, then I'll just track you down.
You don't want to make Saundra cry.
That's right. I cry at Hallmark commercials. So let's not do that. All right. Are there any questions? I don't see any in the chat. Charles, you're awesome again. We did it. Any questions? Okay. Well, if you think of any after we end this call, you can definitely send me an email. My email is in there. Yes, Charles?
There was one thing that you mentioned prior to the webinar, Saundra, and that was for Nevada. They don't do any paperwork. Everything is online now. So there are some states that are still paper, right? Fax, or you mail in the request for the registration form. With the state of Nevada, everything is electronic, including listing PayrollCentric as a TPA or third-party administrator. All of that is done online. What we're saying is each state is different. There are some states in the South, I think like Georgia, Virginia or something, where it's basically the unemployment department is like maybe one or two people and they use a fax machine or something like that. And then others where it's like everything is like all online. So when you contact them, it's going to be a different experience depending upon the state.
Right.
But again, like we said, Texas, you can't register in that state until you have wages already reported in that state. So each one is different. So we can't necessarily go over all 50. But if when we get to the point where you are going in, I'm going to reiterate again, I've said it like several times, but repetition makes for easy remembering, is you let us know and we will provide you with the links for that specific state. And if there's any questions, you can ask us. Ideally, you should be checking with the state agency, simply because they're the ones that make the rules. They're the ones who would be best able to answer the questions. But we would be able to at least talk with you about it and see, help you with that avenue. Okay.
Right.
So.
Okay. Well, I think we've pretty much covered it. If you think of a question afterwards, like I said, my email is in the chat. Happy to answer anything, or you can always give me a call. I, love to talk to you. So please do that too. All right. Coming up next week, we're going to be talking about, again, adding new employees and direct deposit and terminating and where to make that change, like I mentioned to you, to make them inactive versus active. And also manual checks. It seems to be a recurring question. So repetition, like Charles said, makes for easy remembering. And I know it's something we've talked about before, but it is worth repeating because we are getting those questions when people call us. It's probably the people who don't attend the webinars who are calling us, Charles. But if you've got people on your staff that would benefit from these webinars, please feel free to tell me to add them to my email address list. I'm happy to do that, or simply forward the email. I have good news. I've uploaded all of the past videos that we've made, including the one from Amanda when we talked about what's to come with exit interviews and termination agreements and things like that. It was a wealth of information, and that is now uploaded. And also last week with Brian Stampley, might recognize that name. He also gave a great presentation on the options for getting small business loans. And if you're running payroll, you're probably not concerned about that, but maybe your owner or your CFO might be interested. So copy that link and send it off to him and have him have a look. And don't forget to subscribe to our PayrollCentric Presentations YouTube channel. The link is in your invitation. Okay, so next week I told you what we're doing, and we're going to observe Memorial Day on the 25th and also June the 1st, giving you all a chance to hopefully enjoy some time of recollection and remembrance of those who gave the ultimate sacrifice for our country. It's going to make me cry because I'm a patriot and I love our vets and those who ultimately gave their life and their family. My heart is there with them. So remember that Memorial Day is more than just a barbecue. All right. Well, thank you so much for participating today. We will be closed on Memorial Day, the 29th of May, and that email went out this morning, and you'll get a couple of reminders next week and the week after that. All right. Thanks so much. Have a good day today, and thank you for being part of PayrollCentric's family. Bye-bye for now.